Hi, everyone. Welcome to the American Dream Team podcast. Today, we have our very own members from the Home First Mortgage Bankers team, Raj Jolly and Troy Mire. There we go. Welcome, brothers, to the show today, to the episode. Raj and I have known each other for quite some time, but it's been a while since I've seen you, Troy. Welcome back to the team.
Thank you. It's a pleasure being back.
Joined us this year, and where have you been all this time?
Yeah.
Tell us what happened.
Well, I've been running my own business in the real estate side, and
Okay.
last year, a year and a half ago, I decided to get my mortgage license
Nice.
and got my NMLS and decided to be a mortgage lender as well. You guys were making all the money, so
Okay.
I decided to join in. But Raj and I have been knowing each other for over 20 years, I believe. Raj was my original lender. And
20 years ago.
20 years ago. And the way we met is I used to hear rumors about him doing loans and never always closing loans with all his clients that he was working with. And one day he pulled up, he caught me in the parking lot, and he rolled down the window, and this smoke just kind of left his Mercedes. And there he was, Mr. Raj Jolly. And I said, I want to work with you. And he said, let's go.
So he's always been the same.
And yeah, basically. And we never lost a deal.
Wow.
And all that time, we've always put them together. So, yeah.
That's incredible.
Yeah.
I was going to ask you, out of all the lenders out there, why join our team? But you kind of just
one of
answered
the biggest reasons is Raj.
Nice.
Just his track record in lending. So you have a great reputation as well, Alex, and that's the other part of it. Because I went to a few different companies and interviewed, but I felt that this was going to be home for me. Nice. We can get things done. We can help a lot of people.
We're very excited to have you on the team.
Yeah.
I think it's a great opportunity this year for all of us to work as a team. It's kind of the first opportunity to work really closely together this year.
Yeah.
And we're really excited, especially with Raj.
Yeah.
With his expertise. He's been consistent for the last 5, 6, 7 years using the credit, right? That you've always been pitching that credit and promoting it and reminding everyone. And sometimes we remember, sometimes market's good and we don't need that, But here we are, full circle. Now everyone needs the credit.
Well, people forget about the people who really need the help. The people who are pushed aside, don't have the good credit, and they're treated. People with bad credit are treated
different.
I think they treated. All the banks, all the credit unions, anybody. Oh, you got bad credit. Oh, I'm sorry. That's they get tired of hearing that. They lose. What do they lose? They lose hope. That's the biggest thing in life. They lose hope. They don't think they can achieve that American dream, which is what? Owning a home.
Real estate.
That's it. Mm-hmm. And when I do help them, and they do achieve that goal, I see tears in their eyes, happy tears. Yeah, and that's what it's all about. I love seeing that.
Now, let's talk about that credit, right?
Yeah.
You make it sound so easy. What kind of credit are we talking about to buy a home right now? What does it take?
Well, you can get into a home with minimum credit score of 580. But that doesn't really get you the best interest rates that's available, or some of the good programs that are available for the top-notch people that do have 700 plus credit. So what we strive to do is we help the people. First step is recognizing, reviewing the credit and recognizing what's wrong with it. You have your multiple collections going on, and with those negative credit trade lines on the credit, what that does is that hinders them from getting establishing any good credit. So first we have to get rid of those negative accounts off the credit, and then we start on building credit. And building credit, there's many different ways of doing building credit. First step, I always suggest them to maybe ask a family member to add them onto a credit card, which brings immediate good credit rating on their credit report. The second thing we ask is go apply. Go apply some, not authorized user, secured credit cards. Some of the credit companies do offer beginner credit cards with a little bit of higher interest rates to getting them on the right path. But we can also add some trade lines for them. That is costs a little bit, gets a little bit expensive for them. But yeah, if you're in a time crunch, we can definitely help them get that going immediately. And all this can be done within 30 days. So, realtors out there who have clients who are looking to purchase now, they have good income, they have the down payment. Credit is the only thing that's holding them back. Well, we can fix that. We can take care of that right away.
Wow. So if I'm looking to buy a home and I've been turned down before because of credit, but I have a job, I have income, how much down payment do I need?
Minimum down payment is you can get an FHA loan with 3.5% down, and that requires not minimum credit score, but it's good to have at least 640 for you to get a decent interest rate.
Now, as a real estate professional with a real estate background, when you're talking to people looking to buy a home, I mean, how powerful is that? How much of a benefit is that?
The driving factor of purchasing a home is to be able to have some credit, and it's the only way. So, like I said before, in our relationship with me and Raj, we had a lot of instances where there were buyers that were credit deficient, and we, helped them out. We've helped to get them on track to put them in homes. I feel I'd rather help those type of clients than clients that have high scores, because there's a different level of appreciation. Not that I won't accept someone with high income, high credit, but there's a bigger joy when, as a team, we can help these type of clients because they want to buy. They don't want to rent forever. Mm-hmm. And, a lot of times they're scared because they think they can't afford the payment. But I always tell people, just make that first payment and everything will fall into place. You'll start to feel comfortable. You'll start to realize, hey, I have extra money saved. I can save extra money. So it's just fear-based. It's knowledge-based. So we just have to, educate more and more. It's constant education in this business. Even in today's technology, you would think that everybody would know, but no, they don't. Especially the lower income folks that think they can achieve this goal. Everyone can achieve it.
Yeah, they don't think that they can get out of this hole. It's
Right.
a hole.
Exactly.
It's the society puts them in a hole, and they don't think they can get out of it. And when they do get out of it, they see the light.
Right.
Oh my God! I mean, especially for real estate professionals, the amount of referrals you get.
Right.
I mean, it's too. There's no value to. There's no monetary value you can put on it. There are how many different ways you can get more business from helping these clients.
Right.
And they become a client for life.
Client for life, for sure. Referral city all the way through.
So I think my struggle is, if I'm just kind of, thinking about the people that I meet, out there, our audience. I've done a credit repair company in the past, nothing against like Lexington Law or some of these other credit repair companies. I pay them like $1,200, $50 a month. Then I pay for like another $10 a month for Experian. And, it's just like, I see some things happening, but then like, is it real? Is it like, how do I know it's going to work? Because I have the income, but is it better that I just save up the money, pay off the debts, and then call the credit card company or collection company when I'm ready to, pay them off
Good
and
luck.
negotiate. Is it better to do that, or is it like, how do I know this is gonna work? What do you like?
Well, let me ask you this, Alex. How long you been knowing me?
I've known you for a while, not as long as Troy, but
And Troy's known me. And between the three of us, how many clients have come back to you and say it didn't work?
I've seen you do a lot of loans, right? I've seen you do a lot of loans. Yeah.
Now, how many? There's not one client come back to me and said, "Oh, it did not work. I didn't like it. I didn't get the house." Not one.
Not one.
But they don't know your clients, right? How
They
do
don't.
How do they know that what you're doing actually works? What are you doing? Can you give a little bit of insight on why what you're doing is different? I mean, what I'm trying to share with them is what you're doing actually works, but why? Why is it different than everyone else?
Well, there's
I
certain
don't get it.
laws that they are established already that from credit by federal government that you can dispute the negative items on your credit with the bureaus. You can have the bureaus. You can question. You can dispute them. You can say, go to the bureaus and tell them, prove it to me that these are mine and I did these. And one of the basic, like these collections, is these collection agencies resell them and they put them on your credit report with different collection agencies. Well, tell them to give me something in writing that has my signatures on there. So that's one of the examples, They have no proof that that's your collection. So basically we go in there and saying, this is not mine. And in this day and age, with all the credit breaches going on everywhere with all different companies, well, that's all I have to say.
So is it that because you're actually doing the work and these other companies aren't doing the work?
I don't know what these other companies are doing. I think they're just there to take the money from these clients. We're not. We are here to...
That's another thing. So I think one thing that's important noting is that you have so much confidence that you don't really take the money up front. You just do it for them. This is a skill. This is a service that you're providing to help these credit challenge.
If you're coming to us and you're getting a home loan with Home First Mortgage Bankers, there is no charge for you to get your credit clean. So there's no risk for you. So that's what we offer. That's what we offer here. We offer a new life for these people who are nobody else would help. We would help you get your American dream.
I mean, the only other way to describe that is like it's a miracle for certain people. I mean, literally. Right? They don't do anything.
I've been told that. I have been told that. Yes.
they don't do anything, and you just fix it for them.
That's right. If you're qualified, you have the income, you have the down payment, you're ready to buy a house, we'll take care of you.
What kind of income do you suggest that I should have in order for us to qualify?
Well, it depends on the kind of house you're getting and where you're getting the house. I mean, with these interest rates being high, yeah, you do need a decent amount of income, or or multiple borrowers that can qualify for a $600,000, $700,000, $800,000 house. But between 2, 3, 4 borrowers, I mean, yeah, you do need $150,000 in total income to qualify for some of these expensive houses.
We are seeing some buy downs though, right? Buy downs of 2-year buy down, 1-year buy down, knowing that potentially the rates will be down in the third quarter, second quarter. We'll see.
Yeah.
So there's a lot of excitement about the rates coming down.
Yep.
So I think with the buy downs, with the credit, there's always a way to buy a house. I always say, if you truly want to buy a house,
we'll find a way.
We'll find a way.
There's a
for
way.
Sure.
Something you just mentioned, 4 borrowers. Do they all have to live in the home? So let's say I want to buy a house and I don't have the income, but someone is willing to help me. What is it called? Co-signing, right? If they're willing to help me co-sign, do they have to live in the house too?
Well, if they're not living in the house, they can have a non-occupying co-borrower.
Okay.
And we just have to hit them with whatever portion of the rent they're paying wherever they're living. So if they're living somewhere else and they're not going to move in the house, and let's say they're paying half of the rent where they live, that will be counted against them.
So as long as they have income, they don't have to live in the home, and they sign on the loan,
Yes,
then they can help me qualify.
that is correct.
Got it.
Yes,
Okay.
yes.
Okay.
Is there a limit to how many borrowers they could be?
On an FHA, the maximum you can have 8 borrowers, but max. I just ran into this recently, actually, and there were 5 borrowers, and 2 were a couple. They were boyfriend and girlfriend. So we had to go get them married, so they can be on the application.
Oh, wow.
So maximum 4 applications, but they could be husband and wife up to 8 borrowers.
Wow.
Yeah.
Wow.
Yeah. So we actually
I remember that. So
remember that, right? I heard
there were 4 applications. Really, there were 5 applications.
Yes.
Because married can go on the same application.
Correct.
But brother and sister or father and son can't go on the same application.
No, they are separate.
Got it. So when you have 5 applications, you got to get 2 of them to go get married.
We did.
Right,
they went to Vegas and got married.
Yeah. That was
Now,
exciting.
wait. Was that a legitimate marriage, or did they literally get married just to get qualified for the loan?
Well, they're married still.
Oh, okay.
They're married still. Yeah.
Wow. People can go through some.
Where there's
Yeah.
a will, there's a way, right?
Yeah.
That's the
Wow,
old
that's
saying.
an extreme case right there.
I've been
Wow.
doing this a long time. That was the first moment for me for
Wow.
so many years. So that you're always learning.
Yeah.
Something
So-
always new coming.
8 borrowers because 4 applications, and technically, if you had 4 married couples, that's 8 borrowers that you can use.
Yeah,
Wow.
exactly.
Wow.
Yeah,
Wow.
yeah.
Exciting.
That is exciting. Right.
Like I said, we always figure it out.
Yeah,
right,
for sure.
Right. Wow. What do you see as far as the market right now this year? How are realtors?
Well, since beginning of the year, I mean, we're in January, and I'm seeing a lot of action, and I'm excited about that.
Okay.
Yeah. I'm seeing a lot of action, and there's a lot of talk about possibly Fed's dropping the rates 2 to 3 times this year.
Yeah.
And I think due to the elections, I think that's going to be in our favor. That will come true. That should happen. And so I see the market, interest rate market, and we see it on the slide down after long couple of years of upswing. You know.
Remember, there is over $1 trillion in credit card debt, and
Right.
so we have a lot of pent up debt that has to somehow get
Paid
fixed.
off.
Yes.
And so we still have equity, especially here in California, where everyone has some equity in their homes, and so there is a way to relieve that debt through that equity, but they're just waiting on the rates to come down to a reasonable place where it makes sense. You know, a car note to be paid off, some credit to be paid off. So that's coming. So we're excited about that as well. We're going to be able to help these people get out of their credit card debt and get them back on track, you know.
And one of the reasons
Because they don't want to touch, I'm sorry,
Right.
they don't want to touch that rate right now, the rates that are,
the first mortgage.
the first round of low
That's
rates
what I
that
was
we
gonna
had.
say.
Yeah.
Okay.
So anyway.
So yeah, actually, that's exactly what I was going to say. Last year, or at least until last year, rates were so high, people didn't want to cash out or do a refinance. But if rates come down, to what point do you think, if it comes down, it's worth it for someone to refi their first?
Well, that's a good question for you,
Yeah.
Raj.
What do you think?
I think if you know
The 5s will do it.
I think 5s would be the starting
The sweet
point.
spot?
Yeah,
Sweet spot.
yeah. Because if you got
3.5 maybe.
Yeah.
I think average is 3.5
right now, right?
Right?
I
Yeah,
mean,
yeah.
and if you're paying $1,000 to $1,500 in your credit card debt, or maybe with a car note, and if you can get 5% rate, pull some cash out and pay off your debt in your car, you're saving $1,500, but your payment might go up half of that.
Right.
For some, people who are working, and barely stretching their dollar, that's a big amount of saving
It
for
is.
them.
You freed up some debt too, by the way.
Yeah.
You know, so
and gives them a breathing room, and the stress level goes down, and
Yes.
they're not stretching, and they can actually go out and buy some food for themselves, especially with the
Exactly.
food costs all that's going up. So
The other thing is, so that's one scenario, but because rates were so high, if you're at 3.5% going to 8%, they were hesitating to sell even though they wanted to because they got the equity, like you said. They could downsize, take some of that equity and downsize, but it's scary because if you're going to get out of a 3.5% loan and go into an 8% loan,
Yeah.
right, versus a 3.5% loan, take some of that equity, downsize to a 5% loan, now your payment might be about the same.
Well, that's causing the pent up in the inventory as well. We have
Right.
fear on the potential seller side. They don't want to go into a higher rate on a new purchase.
Exactly.
So they're doing remodels, they're doing ADUs, things like that to suffice the time being. But at some point, they still want to get out. People want to move.
Right,
the
right.
average buyer or homeowner is in a home 5 years,
Right, right.
and then they're ready to either downsize or
Or
increase
upgrade,
the square feet. I'm a real estate broker for 20 years, so I understand
You know the
their
habits of-
psychology of their habits. And this is California. We're just in constant motion. We
Yeah.
have people leaving, we have people coming. I believe we have more people coming in to California than leaving. Others would say otherwise, but
I think they're coming back.
I think they're coming back.
I've been
too.
hearing that
Yeah.
too. They're coming back.
Yeah.
So
There's not much. The grass isn't that greener
No,
on the
it-
other side.
it never is.
Right.
No,
So-
once you're used to California weather, you don't want to be anywhere else.
no, yeah. So anyway,
That's where I get all my tan.
So for people that are kind of on the fence,
Yeah.
right? I mean, this is something to think about. If we know rates are going to come down and there are going to be a lot more, activity,
yes,
here's the $1 million question that everyone's asking. Do I buy now or should I wait? Should I wait and see what's happening? I mean, that's kind of, the big question mark right now. And every day that they wait, time's going by, but what are some of the pros and cons to waiting and doing it now? What would
I
you
think
say?
it's based on each individual's plan or goals, how they want to pursue this idea. Because, there's a lot of movement as far as there's divorce sales, there's, I'm sorry to say, there's deaths that happen. There's all types of movement going on.
A lot of job losses.
A lot of
going.
job losses, so there's things like that. It just depends on their plan. If they have to try to buy a bigger house because they need to do it, then they should do it. I mean, the rates eventually will adjust. Like I said, they could do a 2-year, buy down on a lower rate and then wait for the rates to adjust and refi again. So there's strategies that, and that's what we're here for, is to show them, there's options in these cases where you think you shouldn't or should buy. Does that make sense?
Yeah, so as a renter right now, they have everything. They have the income,
Yeah.
right? They fix the credit with you, right?
Yeah.
So now the only thing is, do I do it now or do I buy it at the end of the year after the elections?
Well, there's that same thing, but the same thing with the renter as also a homeowner, right? You're renting a property. You're renting. Let's say you're in a nice, decent apartment and you're living. You're paying $3,000, $3,500 rent,
Especially here.
Especially here.
Yeah.
And,
That's about the average right there.
And you get into a $800,000-$900,000 house. You're looking at $6,000-$7,000 payment. You're doubling your payment. But if the interest rates come down a bit, if you're in the mid fives, now you're looking at maybe $4,500 to $5,000 payment, and then that would make I would move at that point. It's like, okay,
Yeah.
$1,000, $1,200 extra. There's a tax benefit I'm getting from buying a home, so I'm basically breaking even. I'm gonna make a move. I'm gonna buy a house.
Yeah.
So yeah, that would make sense. So it's all about the interest rate. It's all about the payment.
Now, going back to what you were saying, if interest rates come down, now they can afford the house. What do you think is going to happen to the housing market?
Yeah, that's interesting. Some would say that we will just accelerate again, and prices will shoot right back up. I'm not sure about that. I'm not an economist, but that's something I guess we'll see what happens. I know there is a lot of pent up sellers.
Yeah.
They're sitting on the fence. They want to move. They want to get out. They want to take the equity, somewhere. They don't want to leave the state necessarily, but they want to potentially buy up or
Buy down. So you do see though pent up demand or pent up sellers. They want to sell, but they're not going to sell most likely to rent. Do you see that scenario with most of these people?
In some cases they have.
They could? Okay. Okay.
But there's a strategy. Not everyone's going to do that. But, I mean, I'm sure it's happening.
Because if there's a reason for that to happen,
yeah.
if they're anticipating the rental market and everything to go down, then they go into a renter's, kind of scenario, then house prices might not shoot up in that case. Well, that's a possibility.
The big factor there is the unemployment rate.
Right.
Okay. So that's going to determine the prices. That's a big factor, always has been over the years. The unemployment rate, where we are with unemployment, and where the prices is going to go up.
It's funny you say that because lately I've been hearing a lot more in the last 30 days than I did in the last 3 years of job losses, companies shutting down right now, small businesses shutting down. I'm seeing small businesses going after business capital, business loans just to survive another 6 months.
So you've been hearing these layoffs, right?
Yeah.
But the big numbers you haven't seen the big numbers yet. They are coming. You will see the big numbers. It always starts with small layoffs, right? Mm-hmm. Company laid off 500 people. Company laid off 1,000 people. Then all of a sudden you're going to see all these big companies, 10,000, 20,000. Big numbers are coming still. And they're already here.
That could shake up the market right there. I mean, that could cause sellers to start to analyze, maybe we should sell now. The market's still strong. The inventory is tight, the market's strong. You could get your money out of the sale of a home.
Right.
So even if you did get laid off, if you own a home, you have equity. If you bought more than 2 years ago, you have equity in your home. So it's not like it's a desperate situation. You have time to sell your home, make the money on the equity, and potentially leave the state or start looking for another job. But your money is there in the equity.
I see that. So basically, either way, the Federal Reserve is going to have to print more money because that regardless of job loss or an active market. The problem is we're not able to maintain the debt payments. So for that reason alone, we're going to have to pump in more money just to get the economy going. So that eventually is going to lead to inflation on asset prices.
Right.
But what's interesting is what you're just talking about. There could be a scenario where job losses kind of scares the market just a little bit, where it could kind of dip down. And then once you dip down, it's not that easy to come back up because then there's fear in the market again for buyers.
Yes.
Well, job losses will create inventory. Lower interest rate will create inventory. And inventory is the key.
Yes.
The price is going up.
So inventory, if there's more inventory than scared buyers, then it might drive prices down, possibly.
But I don't know if they will drive it down, but it will stabilize them a little bit. And that's what we're looking for. We're looking for that balance. We're looking for that right interest rate, and unemployment rate maybe edge up a little bit, and then and hopefully that will stabilize the market where we're not dropping, but we're stabilized. We're not as shooting up like we were. Because the interest rate was so low and everybody wanted to buy,
part of this whole market increase in price was because everyone is in the market. We have the foreign buyers, we have Wall Street. We never have seen this in our life before. When you and I first started, it was inventory everywhere. It was anytime you needed to go find a house for a buyer, it was available.
was always
there was
something.
tons of properties for availability, but technology and Wall Street and everybody else wanting to get in the market, flippers and everybody's mother and father that wanted to get some of the American dream. They drove those prices up. In some cases, some company in the country, I don't know what company it is, they own thousands of houses, rental properties. I mean, wow.
Many are like
wow.
that. Yeah. Thousands.
Thousands, So that's taken away from the average American that wants
They're not
to
going
just
to
buy
let
a
it
house.
go.
They in some ways there's an idea of us being a renter nation.
Yeah.
And I think that's wrong. I think it's
Unjust.
criminal.
To
even do that to its own people.
Well, there is a bill out there that they're trying to pass.
I hope they pass it.
Where the corporations can buy properties.
Yeah.
And so let's see what happens with that. Yeah.
Yep.
It's interesting.
Well,
exciting though.
Yeah, definitely exciting. We're ready though.
We're ready.
We're ready. We're here to serve
all day long.
We have the credit. I mean, I think, like you said, that's going to be the big differentiator.
It is.
Yes.
Yeah. So how can we? What are the steps to get more information about the credit? Like, what would you do? Is it they pull credit with you? Will it affect their credit? I guess if their credit's not good, it wouldn't affect their credit.
Well, when we run credit, we don't really run a hard pull. We run what's it called? A soft pull.
Soft pull, right? Yeah.
It doesn't really put an inquiry on your credit, and but at least it gives us an idea, a view of what's going on with your credit report, and then that's the first step.
And you, like you said, you would verify that they have income. What is it? 2-year job history.
That is correct.
Verifiable income, and they have to have the down payment.
Yeah.
Then you could offer maybe doing a credit evaluation.
Yes.
Yeah.
Yes.
Okay.
And there's no charge to that. Yes.
Okay. All right. Well, for more credit information on our H1 credit transformation program, this is where you have a job, you have your income to qualify for a mortgage, you have your down payment, but you may be weeks, months, or a little bit of time away from getting that credit score up to the point where you can qualify for a loan. Well, you may not have to wait, because we have Mr. Roz Jolly here with Home First Mortgage Bankers, who has the ability to transform your credit in as little as
3 weeks.
3 weeks. I've seen it in as little as
2.5 weeks, 10 days, 12
2.5
days.
weeks, 10 days. I've seen some in 72 hours.
Yes, that's called rescoring. We can do that within 2 to 3 days. Yes, that is correct.
So in a very short period of time, Mr. Jolly here may be able to help you get into that dream home before you feel like you're ready to qualify. So for more information, go ahead and DM me at Alex Rocky Kim, H1 Credit, and we will send you more information on how to get this process started.
We're here for you whenever you need us to help you achieve the American dream.
Thank you, brother.
Thank you, Alex.
Thank
Troy,
you, Alex.
thank you.
Yeah,
Thank
thank
you
you. I
for,
appreciate having me
joining us
here.
today.
Yeah,
Yes.
thank you very much.
It was fun.
Look forward to it again.
Yes, we'll have to do this more often.
Yeah.